There are numerous projects in the crypto and blockchain space, but Vechain is unquestionably one of the most fascinating. There are many good reasons why this project could pique your interest, so let's find out what they are. Hi Fixers, welcome to Fix Your Finances. If you want to build your financial wealth and fill your mind with the right information, make sure to hit the like button and subscribe for us to provide you with more valuable content. Let's do a brief recap on how the blockchain is set up and works for those of you who are new to Vechain. Unlike more meta blockchains such as Bitcoin and Polkadot, Vechain has a particular aim in mind to help businesses improve. The VET was initially an ERC20 token launched on Ethereum, but since then, the Vechain has evolved and now offers its own blockchain called Vechain Thor. This is significant because it significantly broadens the value proposition for the Vechain. Vechain serves as a link between the physical and digital worlds, using RFID tags on items that can be modified and sent data into the Vechain via blockchain. Users can keep product data such as authenticity, temperature, location, and general status of the goods. This is a significant advancement in the ability of businesses to monitor their products. They can see in real time how food or medication is being stored and whether it is at an incorrect temperature or in the real world with Vechain's collaboration with BMW. Many used vehicles have odometers that have been tampered with to indicate fewer miles than they actually have driven. But with the correct chips inside the vehicle, information about mileage can be sent in real time to the blockchain and stored indefinitely in a way that cannot be tampered with. This means we can buy cars or something else with confidence in the efficiency of what we're getting. VET or VT is a token that can be traded by smart contracts. So if a dApp is installed on the Vechain, users can pay for those products with VET. VTHO is an abbreviation for Vechain Thinking Resources, and it is used to compensate for the overall cost of the blockchain. Essentially, when you would pay Vechain to use the network. A validated car designed by BMW is an example of a dApp built on top of Vechain. BMW developed the dApp in order to minimize fraud in the German used car industry. According to the app's documentation, each contact with the car is saved as a hash on the blockchain. Anything from changing a filter to replacing a battery, as well as an annual service insurance claim, will be covered. BMW vehicles have SIM cards and can send data to the blockchain on a regular basis, so the information sources are both in-vehicle and external. This data may inform prospective customers about the car's true past, but it can also result in lower insurance rates. The Vechain is based on a group of what are known as masternodes, who are in charge of finding consensus on the blockchain. These do not tend to be especially decentralized, which may contribute to significant governance issues. With proof of stake, the overall goal is to increase decentralization and protect the blockchain from bad actors by requiring each link in the chain to create a bond of coins that can be taken away with proof of authority. Anyone who wants to set up a blockchain node needs more control over the blockchain, and with 101 master nodes, the blockchain has the ability to be controlled by a few investors. However, it raises a crucial question: is Vechain really a blockchain as we know it, or is it merely a modern software company that uses cryptocurrency instead of shares? While we are leaning toward the tech industry, for the majority of people, this is a double-edged sword. To begin with, we believe that having a central authority can be helpful for a project like this because it gives the project momentum and a unified direction, both of which are crucial. On the other hand, it could expose the ecosystem to all the drawbacks of centralized companies that blockchains are meant to eliminate. When it comes to staking VET tokens, you can do so through the Vechain's Proof of Authority scheme. The annual yield on staking incentives is 1.5%. Although better than nothing, investment returns will then be primarily determined by the price appreciation. On the other hand, it could expose the ecosystem to all of the drawbacks of centralized companies that blockchains are meant to eliminate. However, the future of Vechain appears to be based on offering a blockchain for producers and supply chains. Despite the fact that, according to the documents and the Vechain white paper, the greater goal is to provide a platform for dApps and even icons, and then to become a blockchain that can be used with IoT or the internet. One example of an IoT product is the blockchain, which holds a permanent record of how things in the home communicate with one another. Vechain functions much more like a business with a blockchain than a piece of code. As a result, Vechain hasn't stopped signing contracts for real-world businesses to use the platform by creating dApps on top of the Vechain Thor blockchain, which is a positive indication that the blockchain will potentially generate revenue from network payments, which is good for the fundamentals of VET tokens. For example, Vechain recently signed an agreement with China's Rinji Hospital to develop the world's first blockchain-enabled intelligent tumor treatment center, in which Vechain will be used to monitor and manage medicines and treatments. The FoodGates platform allows buyers and sellers of produce to monitor the origin of goods in the supply chain, such as animal health, packaging, and shipping conditions. Vechain is also looking for developers to build NFT projects on the blockchain. NFTs are popular right now, but NFTs will change the way humans build and own value in the long run. Currently, NFTs are used to build and store digital rights to artwork. Of course, Vechain isn't the only blockchain doing this. However, Vechain has also collaborated with Traveler.com. Traveler is a blockchain-friendly booking platform that uses blockchain technology to allow for room bookings. This relationship appears to be limited, and we do not believe VET tokens would be considered a valid candidate for payments across several different networks. It does, however, add value in general. Vechain has a market value of about $4 billion and has seen a very good leap to the upside in recent weeks. The stock limit is 86.7 million tokens, with a large portion of that already in circulation. Actually, the approximate price of Vechains is 6 cents. In terms of the Vechain price forecast for the next 12 months, we have a bullish case of around 12 cents and a downside chance of around 5 cents. If nothing more happens with Vega as more partnerships are revealed, this could be ideal for the new VET cycle and would keep Vechain in the news with positive articles potentially supporting the price. They'll still move upwards to hit the crucial point of 2.2 of a dollar, which is the very main resistance level for Vechain. And if it were to break that resistance level, we do believe that we'll be hitting new higher highs in the immediate short term, which would be very positive for Vechain's price, Vechain's project, and what it wants to achieve. So these are the considerations you must make, as well as the long-term outlook. When it comes to cryptocurrency investing, keep in mind that it is not a 100-meter sprint, but rather a marathon. So, even though such price movements are possible, don't expect $1 tomorrow or next week. The blockchain's business case is unmistakable, and the people behind it are clearly business-focused, with an emphasis on providing value for themselves. So the cryptocurrency Vechain isn't especially decentralized. At least in terms of governance, it seems to be more like a private sector company, which may not be as horrible as it seems. As if the blockchain team is going out there to make money to make the blockchain as a project a success. This may mean that investors profit as well. This may, however, restrict long-term growth, since large stakeholders and other consumers could choose to use rivals that deliver genuinely decentralized blockchain projects that are not controlled by a single central group. Let us know in the comments below if you think Vechain will 100 times, and make sure to subscribe and follow us on Instagram at FixYourFinances_. See you next time at Fix Your Finances.